This is going to be the last and only video that you need to understand liquidity with supply and demand. And here are my statistics backing what I'm teaching. I'm currently trading around a 60 to 65% win rate. I have about a 60% net P&L for the month of May. I have a 3 profit target, and then my day win percentage is about 91%, which basically means out of 10 trading days, I've only lost once. And of course, this has not only helped me, but also hundreds of my own students see success within the markets. So without further ado, let's jump into the markets. Let me show you the correct way to pinpoint liquidity, the correct way to trade around liquidity and against liquidity as well. A lot of you get caught up in the market trading on points that have liquidity sitting around it, which liquidity is basically just built up orders sitting around a certain point. And that is what we do not want to be trading on. We want to be trading against that. So I'll break down all the examples right now. There are 2 main examples I want to show you today. And I promise you, this will help you immensely. So these are the 2 main points of liquidity within the market. So for example, number 1, what we have here is we have a trend, right? We have a major channel being formed to the downside, a major channel being formed to the upside. And now what a lot of people want to do is they're going to want to be trying to trade off this supply and this demand sitting right here. But those are completely invalid in my eyes because you have tons of built up orders sitting right below it. Or if you're trading off supplies, above it. And same exact thing for selling off supplies. You're going to want to trade off this last high, this last supply that was formed, but you have a lot of built up orders sitting above it. It takes you out and then it continues down, like I said, to your TP area. And of course, the same exact thing goes for demands, right? So what you have is you have low, 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 low right here. What happens is you want to trade off this last low that causes impulsive move to the upside, breaking this previous high right here. What happens is you get run through. Your stop loss is now hit. We take out all those previous buyers and then make our move to the upside. Whereas now all you want to do is you want to retarget that low that previous swept all these buyers, come back down, mitigate it, and then continue back up into your TP area. You don't want to be trading off where a lot of buyers are at and where a lot of sellers are at, like right here. We simply want all these sellers to get taken out. Obviously, as liquidity, we have our nice break. We have the protected high that swept previous sellers all within here. We have our official break in our major low right here. We then retarget that high that swept previous sellers and then continue back down to that TP area. And that is it. And the same exact thing applies to this instance in this case right here. We have equal lows and we have equal highs. Some of you are going to be trading off this supply and some of you are going to be trading off this demand, but they're both invalid because previously you were bearish and previously you were bullish, whereas now you're forming liquidity to the top side for the supply and liquidity to the bottom side for that demand. So 9 out of 10 of the times that you're trying to buy off this equal low point right here or sell off this equal high point right here, you're going to get run through, and your stop loss is going to get hit most of the time. So what you want to do is you want to wait for these points to get taken out to then retarget those points that actually broke them, sitting right here on this low in this demand and sitting right here at this high on the supply. You guys really need to stop trading off liquidity points. You need to learn liquidity and you need to learn overall structure and bias in the market. Without those 2 things, you're never going to see success. And most importantly, you need to get off the 1 minute. You need to stop looking only at the 1 minute. You need higher time frames to add into confluence. There's going to be a lot of noise on the 1 minute, whereas if you go in the higher time frames, including the 5 and the 15 minutes, there's going to be less noise and more bias that you can actually work off. So what some of you will be trying to do is you will be trying to trade off that last low that caused impulsive move. But what happens a lot is you get swept. You get taken out at that last demand for then price to then continue back up in your direction of TP. A 1 minute supply or demand can easily just be liquidity sitting on the 5 or the 15 minute. So we come into the markets. Where are some of you going to want to be buying from? Let's see, maybe here. This is the last low, or maybe right here because it broke the previous highs. Now, the thing is with that is you have a lot of lows sitting to the left of this demand sitting right here, which is classified as liquidity. And on this point, you still have yet to break this high sitting right here. So this is just completely invalid. Not only that, but you do have this low right here, which is classified as equal lows. So you have liquidity points, an invalid point right here, and you got a demand with tons of equal lows and liquidity sitting to the left of it. So they are both invalid. Now what we do is we play this out and we'll see what happens. And as you can see, it did play out a bit quick, but we swept all of that liquidity sitting to the left and all those previous early buyers. We take them out, we make our move to the upside, we then come back down into that low that swept previous buyers and made the impulsive move up, breaking previous highs. And we then target that high sitting right there. And that is simply it. Now what you can do here is you can get confirmation entries with newly formed points, whatever fits your plan, whatever you like to do as a trader. But if we let this play out, this 95% of the time will actually hit TP. And there you go. There it is. So you need to stop trading off liquidity points. You need to look to the left, like I said. You need to see what's being swept before the impulsive moves. Now, obviously, this won't play out 95% of the time. You do need to backtest this. You need to see what goes best for you, what works best for you, what doesn't work best for you. You need to backtest the pairs. You need to backtest your sessions. You need to gather all the data backing your strategy. Don't just jump into strategy and go on live. You need to gather all of the data and find your edge within the strategy. That wraps up the video. I hope you guys enjoyed this. This is liquidity pieced together with supply and demand. I hope you now understand liquidity as a trader, and I hope you stop getting trapped. My monthly Discord is now open. Click the link in the description below. Anything else that you need is in the description below as well. All my socials, my Instagram, whatever you need, just click the links below. Make sure to leave a like. It helps a lot. Leave a comment. Let me know what you thought. Share this with a friend that you might think needs it. Follow me on Instagram, SMC Jello. I'll see you guys soon.